Hello, in this presentation we will compare QuickBooks Online versus QuickBooks Desktop. Hello, in this presentation we will enter bills and pay bills within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses, and a QuickBooks Pro desktop version course you can find at the link below. Here we are in the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem, entering bills and then paying bills in the same presentation. There's a couple different ways we can enter bills. One, of course, is to select the drop down up here, and the other is we could go to this expenses on the left side. So let's take a look at that first, and then we'll see the drop down. So we're going to select expenses over here. We have two tabs up top. We have an expenses tab that we can see detail, and then we have the vendors tab. Now, if we're going to write the expenses to a particular vendor, we could go through this item and create the bill from this item. So this is one way that could be very useful for some people to go through this process. If we select the drop down for a particular item, so say we're paying a particular bill, such as the phone bill, which we'll pay here at some point, we could select the drop down and have the bill that we're going to write, or just write a check directly to them. Remember, the difference between those two items will be that if we write the bill, we're not going to actually write the check yet. It's going to go into accounts payable and an expense of the phone bill in this case. Then we'll write a check, reducing the accounts payable what is owed, and decreasing the checking account, writing the check at that point. So we're going to go through that process. We are, however, going to just go through the normal bill process up top. So we're going to select this plus item down here, up here, and then we're going to go to the vendor section, and we have the same kind of options here. Remember that we have the bill and then the pay bills, which is very similar to just writing a check. By the end of the process, we will, in essence, have arrived at the same destination as if we just wrote the check. So what's the difference? Why wouldn't we just write the check? We're going to pay the month-end bills, the utility bill, the phone bill, and whatnot. So why not just write the check? Why enter the bills? If we have all the items that we want to pay at this point in time, we might just want to just write the check. But however, if we have a staggered point in time and we want to enter those bills at the point in time that we get the bill, meaning a closer point in time to when we actually incurred the expenses, like the phone bill and the utility bill, then we want to enter the bills when we get them. That would be better, even if we're not going to pay them at that point in time. Also, if we enter all the bills at one point in time, that is a system that will make them go through the accounts payable, so we can track them through the payable even if we pay them on the same day. And it'll also allow us to pick and choose which checks we want in a pretty nice format, so that we can then print all the checks at one point in time. So those are kind of the reasons why we would not just write the check, but enter the bill and then pay the bill. So the difference, of course, is that writing a check decreases the checking account and it records the other side, the expenses, whereas entering the bill first puts it into accounts payable and the related expense, for like example, the phone expense, and the accounts payable, the liability going up. Then when we pay the bill, it's going to decrease the payable, meaning we no longer owe it, and it's going to record the decrease in the cash. So that's what we're going to do here. We're going to enter the bills and then pay the bills. So we're selecting the bills item. It looks very similar to a check format, except it's a bill, and it says bill up top. And when it says bill up top, note that that means that it's going to increase the payable, the accounts payable, a liability, a current liability type account. So the first one's going to be a Verizon. We're going to pay the phone bill to the phone company that we have is Verizon. We select the drop down, then we can find Verizon here and or start to type the text, which will then auto-populate. So we're going to type in Verizon. There it is. So we're going to tab through this now. So I'm not going to put the mailing address. It should populate. If we had put that in already, it would populate for us. And the terms, we could put the terms here. I'm going to say 30. It's due in 30 days. And we're going to bill date. So the bill date, we're going to keep at 2/28/21. And we might want to, again, get more specific in terms of when the bill date is so that we record the actual expense at closer to the point in time we consumed, in this case, the telephone usage, as opposed to the point in time that we paid for the telephone usage. And then we've got the 330 here, being when it's due 30 days later. And we're going to go down to the account then, which is going to be the phone bill. So if we select the drop down, we could find it there and or type in telephone bill, telephone expense. So here's the telephone expense. I'm going to add that, and we're going to tab through here. And the amount then is going to be for $365 for the telephone expense. Now note that this is the second month of operations, and sometimes it'll auto-populate this account down here, but we put the phone bill in last time as just a check because we were practicing writing just a check rather than putting it into the bills first. But as we do this a couple times, as we enter these bills, it's going to be nice that we can look at the last month of operations. We can say, hey, where did we put this? Did we put it into just utilities bill? Or did we break it out into a phone bill? Did we break out a separate phone bill by location possibly? We want to be consistent on that, and if we do this a couple times, it'll start to auto-populate for us, so it'll have that information. And then we're going to say the $365 is the amount, and that will be the amount of the phone bill. And of course, what will happen here, once we record this, it's going to record the expense, increasing the expense, reducing net income by the $365. And the other side, because it's a bill, not going to be decreasing the checking account, but increasing the liability, the payable account. So we're going to say save and new. The next one's going to be for the internet expense, and that's going to be to Spectrum. So I'm going to select the drop down, and we could find it and or type in the person or the company, Spectrum, which I believe is a new vendor for us. So I'm going to type in Spectrum as the vendor. And then we're going to say tab, and it's going to say, do you want to add that? We could add the details of the dates and whatnot, but we're not going to right here because we just want to write the check. Or we want to enter the bill, I should say. So we're going to save that. Scroll through. We don't have a mailing address. Terms, I'm going to say net 30 once again. We're going to put the standard terms here. Date is going to be as of the end of the month, February 28th, 2021. Due date, 30 days later. And we're going, and by the way, if it's not due within 30 days, obviously the terms, you might have it due on receipt or you know, whatever terms are appropriate to have that. That'll help you to kind of know when you have to actually pay these when we go to the pay bills area. So then we're going to have the accounts down here, and it's going to be for the internet expense. Let's see if we have that. So we can select the drop down or drop up in this case, and we're going to type in the internet. I think it's a new one, internet expense. So I'm going to put in internet expense and then select tab. And this is another one we're going to have to really decide. Do we want to add another expense? Do I just want to put it into utilities expense? Should it belong in the phone bill expense if it's grouped up with that area? Or do we want to break it out in its own area? There's no set rule, set pattern. It's really going to be up to the company as to how much detail they want. The general rule or the general guideline would be that we want to have some consistency. We want it to be consistent time over time so we can compare month to month what is happening in particular accounts, and we want it to be material. If something is totally immaterial, then maybe we don't need a separate account. Maybe we can put it into just miscellaneous or something like that. If it is material, then we'd want to break it out, meaning it has a significant impact on decision making. It could make us change our decisions based on the accumulation of this information on the financial statements in a different expense account. Okay, so we're going to say that it's going to be an expense type account, and the type of expense we are going to have, if we scroll through these expense types, I'm just going to include it in a utilities type expense down here. So we're going to put it into the utilities. It's going to be the internet, no other description necessary. It's not a sub account of any other account. And we're going to save that item. Then we're going to say that the amount is going to be for $180. Not going to be billable or taxable to, we're not going to tax any other customer or bill any other customer for that. And that'll be the amount. What's going to happen then? Once again, it's going to record the internet expense of $180. And it's going to record not a decrease to the check yet, but an increase to the liability of accounts payable. So we're going to say save and new once again, save and new. And we're going to enter another bill into the month, and we're going to have the utility bill now for, we're going to say the electric bill, which to us is the Edison bill. So we're going to type in, once again, we could see the drop down and see we have the vendor here. There it is, but I like to auto-populate it by typing in Edison, and then it auto-populates. So we're going to tab through this. Terms, we're going to say, once again, is net 30. Date, 2/28/21. The due date then, 30 days later, 3/30/21. Bill number, permit number, and then the account. And once again, we could put this into, you know, the electric bill, the electric expense versus some other type of expense versus the gas, possibly. Or we can group them all together into utilities, which is what we will do here. We're going to put this into utilities, selecting the drop down. We could find it there, or we can start to auto-populate, as I will do here. So we're going to say utilities expense. There it is. Now note that I'm not putting expense in the description. We're just putting utilities, and that is something also that is up to the bookkeeper. What type of consistency do you want? Different bookkeepers will do different things. Some people like to have expense on everything that has an expense in the name. Some people say that all expenses don't need expenses because it's in the expense group. You don't need to put expenses. And some people just put expenses on those types of expenses that they believe need more description to them, because there might be another similar type of account out there. So something like payroll, it would say payroll and it would be an expense account category, but you might want to put payroll expense, considering the fact that there will also be a payroll liability account, and there'll be a payroll tax expense account and a payroll tax liability. So there could be a lot there. So those are kind of the guidelines you might want to think about in terms of setting up your rules. Of course, what we're going to do when we take up a company is follow the system of what has been done prior, and then make minor changes as we go forward, typically to keep some consistency as we go forward. So 648 will be the amount, and again, no customer or anything like that. What's this going to do? It's going to record the utilities expense, increasing the expense, reducing net income, and the other side not going to the checking account, but going to the increase of the liability account, that being accounts payable. What we'll do now is we'll record this, we'll take a look at the financials, see what is happening, and then pay these bills. So we're going to say save and new. I should just say save, but save and new. Close this out. We're going to go to the reports on the left side. We're going to go to the reports and take a look at the balance sheet. So we will run the balance sheet. We're going to run it for the month of February. So it's going to be 02/01/212/02/2821, February 21st, 2021 to February 28th, 2021. We're then going to run that report. And then if we go to the, it's not going to be in the checking account. We didn't write a check yet. What we did do is increase the liability. And that's in the accounts payable down here. So here's the accounts payable account. And we, by entering bills, have increased this amount that is payable. If we select that amount, then we see all these bills. So here's the 3 bills we just wrote. That is increasing the payable by $365, $180, and $648 respectively. We got the telephone, internet, and utilities as the split account, or the other account that is being affected. If we select any of these, we then will find a bill that we have just written. So here's the phone bill, here's Verizon, and there that is. So we're going to close this back out. And let's take a look at the other side, which will be the telephone expense, internet expense, utilities expense, which will be on the profit and loss statement. Let's go to the profit and loss statement. We're going to go to the reports then on the left side. Profit and loss, the report we want. Tabbing through the profit and loss, we're going to put the dates of 02/01/21 to 02/28/21, February 1st, 2021 to February 28th, 2021, and run that report. So here we have the report that has been run. And if we scroll down, we see the expenses. We got the interest expense, and then the internet expense, the telephone expense, and the utilities expense. And of course, if we select any of these, we then see the detail for the bill that we have written, in this case Spectrum, which is the internet expense. Selecting that item, we find the bill. So I'm going to close this back out. We're going to go back to this report. important to note here that the expense has been written here. We've increased the expense, decreasing the net income now to a loss at this point. And that has happened even though we have not yet paid these expenses. We haven't paid them. We just entered the bills at this point, and that is decreasing the net income. So what we're going to do now is pay the bills. So we'll go through and pay them, which will not affect net income again, even though cash is going down. What it will do is decrease that liability we saw on the balance sheet, the amount representing the money we owe to these various folks for telephone, internet, and utilities bills. So in order to pay the bills, we want to pay multiple bills. So I'm going to go back up to this plus icon up top, and we're going to go see we just put the bill in place, and we're going to pay bills. Now, this pay bills is a little deceiving because it's the same as a check, really, except we're going to have multiple checks. So you could say multiple checks we're going to write. That is really what's happening here. So we're going to pay the bills, and then it gives us these items that we have in place that are in bills, meaning these are what the vendors that we owe, which we have set bills out for. This amount here is what is populating, or what makes up, the accounts payable account. So every time we put something in accounts payable, we must assign a vendor that we owe, like Verizon, Epiphone, Edison, Spectrum, and so that we can track who we owe and have a separate subsidiary ledger, as well as be able to generate a process for payment such as this. So it's going to come out of our checking account. We're going to say the date, payment date is going to be 02/28/21. We're going to say the starting check is 10/20. Hopefully that's correct because the computer is generating that. And that means that we're just going to pick whatever they pick on the first item. We're going to assign that to the check number and go straight forward. Now, if we were to print the checks, then we would have the first check, which would have a check number on it already of 10/20. And then when we print the checks, it will then print in that order as well. If we're not printing the checks and we're writing them by hand and we're just entering this data into the system to track it, then we want to make sure that we assign the right check number to the 3 checks, and that'll just make it easier for us to do the bank reconciliation at the end of the month and track if there's any problems with the checks. So we're going to check off the 3 items. It's going to be Verizon, Edison, and Spectrum. I'm not going to pay the Epiphone. They're going to have to wait for their 1,200. I hope they don't get mad. They're our major vendor. We don't want to get them mad here, but we're just going to pay these amounts. We're a little light on the cash, possibly. I don't know. We're just going to pay these 3. So once we do that, it's going to write 3 checks. What's going to happen here? Obviously, the checking account's going to go down by the 365, the 648, and the 180 in 3 different checks that will be generated to do that. And then the other side is going to go down. The accounts payable side, reducing, will go down by these 3 amounts, as well as the subsidiary accounts representing the fact that we no longer owe Verizon, Edison, and Spectrum the 365, 648, and 180 respectively. So this will be the items here, and we're going to go ahead and save and print this. Before we do that, I just want to point out that there's a lot of different kind of filtering options that can be used if we're with a company that has a lot of outstanding items that will be paid. And this could be the case that, many people work in just the accounts payable area, just managing, the cash flow and who they're going to end up, who they can pay and when they're going to pay them. You can have a lot of filtering options in terms of which amounts are going to be past due. Do you want to see all the amounts? You just want to see the amounts that are overdue right now, the ones that really need to be paid. So you can use some filtering screens if there were a lot of items here to filter what needs to be paid using that screen. And here, of course, we only have 4, so it's pretty easy to see. So we're going to say save and print these items. Save and print. And we're not actually going to print them here, so I'm going to close this out. And then we're going to go and see what happens. So let's go to the balance sheet first. So we'll go to the reports, left side. We'll go to the balance sheet. We'll change the dates of the month of February, 02/01/21 to 02/28/21, and that's February 1st, 2021 to February 28th, 2021, and run that report. Here is the report. Here's the checking account. If we select that checking account to see what's in it, we scroll down and we see our 3 checks the bill check here to Spectrum. And then here's Verizon and Edison. Now I'm going to go through each of these. I'm going to choose the Edison here. So if we select the Edison, we see the Edison bill. Now note, if you hadn't had a check number here, then we could add the check. If it says print later, then you want to add the check number. We can uncheck that, and it should auto-populate the check number. So then if we close that back out, we can do the same for the others. If we go to Verizon, here's Verizon, and it has the same check number. It should be different. I'm going to check on that, and I'm going to say, if this wasn't checked, I'm going to uncheck it. I'm going to change this number to 21 so that it has a different number. And this is kind of part of the problem. Obviously, if we wrote the checks, it would populate the check numbers in order as we write the checks. But if we're just entering the checks that we wrote somewhere else, the check numbers can get a little tricky. We want to try to tie them out to the actual checks we're writing, because that'll give us a safety check, an internal control over the checks to make sure that no one steals our checks. The check numbers should line out. And it also helps us, of course, if there's a problem with a check and we want to see if it cleared or not, to have the right check numbers on there. It'll help us to see if that did clear. So then I'm going to say save on this one, save and close. And it says the transaction is linked to another. We're going to say yes, and that's okay. And then we're going to do that one more time. And the last one went to Spectrum. No check number here. So I'm going to check on that. And then this print check feature is here. I'm going to uncheck that, and it gives me a number, but that's really the starting number. That's the number that the check was going to start at. And again, that's just kind of like one of the quirks of the process when we're not actually printing the checks. It's going to give us that starting check. So if we're writing them by hand, we want to go back in here and just say, okay, we want this to be 22 because that's the actual check we wrote, check number that we wrote. And then we're going to say save and close. And we're going to say, okay. And there we have that item. And we're going to close that or go back to the report. Now, if that's confusing, another area we can look that up that could be useful or faster to do this possibly is to go to the accounts down here. We're going to go to the register. So we'll go to accounting, and the first account is the check register. So if we go and view the register, oftentimes that's a way that people like to see this. We're going to view the register. And then here's their checks. Now, if we hadn't had a check here, it would say to be printed there. And if we had already written the check, we want to check the check number and just say, okay, that should be 1020, 1021, 1022, and just make sure that's the case before we mail out, the checks. So then we're going to go back to the reports one more time. I'll go back to the reports, check the other side. We're going to go back to the balance sheet. Change the dates to 02/01/21 to 02/28/21. That's February 1st, 2021 to February 28th, 2021, and run that report. Then if we scroll down to the liabilities section, we see the accounts payable here. That's what we are paying off. If we select that, then we can scroll down. We see our checks, and we see the Spectrum. These are the payments here, so they're a little bit out of order. Here's the bill, here's the payment. So we're looking for not the bill that will increase the amount. We're looking for the check payment. So here's check 1022, 1021, and 1020. If we select any of those, then it'll show us the check here. So if we scroll down, there is our items. So I'm going to close this back out. There's the Edison check. Now, part of the reason it's going to be a bit out of order is because it's in order by date, and so and of course we wrote both the bill and the check on the same date. So if they were different in date, then you would typically see the bill happening and then the check happening. What that means in terms of the liability account is, of course, that the bill is increasing the liability. So this is what we owed before this bill, and then it went up to here. And then this check, any check payment, and this of course is a bill payment check. It's a check with a check number that was paying off a bill. And then it's going to have that decreasing the liability to here. So here's what it was before we wrote that check, and now we owe less money. If we looked at the report of the vendor detail, meaning who we owe by vendor detail, then it'll show that we don't owe these people anymore, either Verizon or Spectrum. So we could take a look at that. We can go to reports, left side, And what we want to see is the vendor balance detail. So here's the vendor balance detail report. Let's select that item. And if we scroll down, we'll see that we don't have, in this case, anything for Verizon or Edison or Spectrum because it's paid off. All that we owe at this point in time is the Epiphone, the amount that is still outstanding. Hello, in this presentation we will record the entering of bills and then the payment of the bills within QuickBooks Pro 2018. If you have been working along with us, we will be continuing with the Get Great Guitars problem. If not, that's okay. You can follow along with us entering bills here and then seeing the Pay Bills icon and noting what is happening when 1, we enter the bills, and 2, we pay the bills, as well as some pros and cons in using this function as opposed to just writing a check. If you have the backup file up to this point, you can restore that by going to the File tab and restoring the backup file, that giving you the information up to this point in time so that we are on the same page. If you've been working through this problem, hopefully we're on the same page as well. If not, then we can follow along with what we have. We currently have the Home tab open. To open the Home tab, if it's not open, you want to go to the Company drop down and Home tab. We also have the Open Lists open over here, so we can see the open windows. To have that open, you want to go to View, Open Window List, so we can toggle back and forth through the open windows. Only open window at this time here is the Home tab. In this case, we're going to be entering the bills. These are going to be the basic year-end bills. We're paying the utilities, we're paying the phone bill, and then we're going to pay the bills. Now this is going to be the normal process when we enter just the bill. That's not going to be the bill for receiving inventory, which might go through a process where we would first have the purchase order and then have the bill related to the receipt of the merchandise. In this case, we are going to be entering the bills for items that will typically be expenses, and then we're going to pay those bills over here. Now, the pros and cons of doing this process as opposed to just writing a check are that when we have the enter bills, we can enter multiple bills at one time, and then really we can choose which bills we want to pay at the end of the month rather than waiting until we actually want to pay the bill to write to the check. If we do that, then at the point of time that we enter the bill, that's when QuickBooks will record the related expense, typically related to the bill that we are entering, or an asset if we're making a bill for an asset that we are purchasing. And that's what we really want to happen in terms of the accrual basis. We want to record the expense at the point in time we incurred the activity that we are using up. Typically, that's at the point in time we receive the bill, being closer to when we actually consumed the goods and services, like the phone bill or the utilities bill, as opposed to the point in time when we pay it, which may be the following month. We want to, under an accrual basis, to be recording the expense at the same point in time that we consumed it in order to generate revenue, as opposed to the point in time that we paid it. So that's going to be one benefit that we have to the entering bills. It's also pretty useful for us to be able to enter all the bills and then pay them all at one time. And then if we're processing these in terms of checks, we can print all the checks at one time, which is nice. If we're not printing the checks, then note that we could enter the actual payments of checks here. We can use the write checks here, or we can enter these directly into the check register, which sometimes is faster if we're just entering the checks. And in that case, we would go to banking, use register, check register. That's going to be our main checking account here, and OK. And we could enter the checks here with the check number and the amount. We'll go back here and see what is being generated within the check register. Just note that if you're not actually writing the checks, sometimes using the check register is faster if you just want to enter the data in order to generate the financial statements and get what you need in terms of reporting processes. We're going to go back here in the open windows to the Home tab and start entering the bills. So we're going to enter the first bill here. Entering the bills as of the end of the month of February, in the month that we are currently working in. And that is going to be, first is going to be for Verizon. Now note if we select the drop down, we have all the vendors here. If we start printing Verizon, It should then populate, and there's Verizon, there is the vendor, selecting tab, now populates the information relevant to this vendor, meaning the information that we had in there basically last time. So we have Verizon and we have the account. Now we could also set up the system so it pulls in the last amount due within the settings. Sometimes that's useful, sometimes it's not, depending on, if it's the same amount that's going to be due all the time. In order to change the settings, you would go to Edit and go to Preferences at the bottom and look through the settings, and you can change those settings. But it's really nice that it populates, at least in this case, the account that was used last time, and therefore not requiring us to do that again. The date is going to be 2/28/21. We are working in the future. We don't have any reference number. The amount's going to be 365, and the bill date, we're gonna say the due date. We'll keep the due date is defaulting at the 3/10. We're going to keep that. Not going to change the terms. Not going to put a memo in, although it'd be nice if we were to put a memo in. We'll knock on it though. And then we're going to have the account already being selected, the default. If it were not, we would select the account. We'd have to add it. Typically, the telephone expense will be included even if we just created the QuickBooks file and used whatever the default setting. In our case, we use the default list of accounts related to a merchandising company. But typically, any default list of accounts will have a telephone expense, so we should not have to create it. And then we have the amount here. Note that we are in the expenses side here, not the items side. If we were on the items tab, we're typically looking at inventory items that we are purchasing. Everything else typically is in the expense side, even if it's not an expense, even if we're purchasing, say, an asset like supplies or like equipment, we will be putting it over into the expenses side. Note that the bill is much similar to a check. It looks really a lot like a check. Most of the data fields will be the same. The difference between the bill, of course, is that once we record this bill, it will not be reducing cash as a check would, but will be recording this to accounts payable. That's what a bill means. It's going into accounts payable and increasing the amount due, in this case to the specific vendor of Verizon. The other side then increasing the expense of the telephone expense, that of course decreasing the net income for the time period it is entered as of that February 28th, 2021. Let's record that and take a look at that. Save and close. We're going to go to our major forms. We're going to go to Reports, Company and Financial, and scrolling down to the balance sheet. Looking first, well, let's change the date ranges. We're going to go to the date ranges, Customize Report, and the dates are going to be 01/01/212, 12/31/21. So January 1st, 2021 to December 31st, 2021. This is when we will be putting the data in for this problem. Hitting OK, we then have our information, and we're looking at the payable. So down here in the payable, double-clicking on the payable, scrolling down, we have this Verizon, the name, the split, the other account is to the telephone. Double-clicking on that, we then see our bill. Clicking out of this or closing this bill, closing this window. We also note, and it could be useful to track this by vendor report, going to Reports up top, scrolling down to the vendors and payables, and going to the vendor balance detail. We then see here the Verizon bill for the 365, double clicking on that. We see the bill for the 365. Closing this back out, we can then go to the income statement, or the profit and loss as it's called in QuickBooks, and go to Reports, scrolling down to Company and Financial, to the profit and loss standard. The dates then we're going to change to 01/01/212, 12/31/21, January 1st, 2021 to December 31st, 2021. Scrolling down to the expenses area, we see the telephone expense. There's the telephone expense, double clicking on the telephone expense. We see our bill here. $365, double clicking on that. We see the telephone expense here, closing this back out, closing this back out. Our net income at this time is a loss of $6,532 within this second month of business. Next, we will go back to the Home tab, and we're going to look at the next bill that we will be entering. So we're going to enter bill. And this case is going to be for the cable bill. So we're going to go to Spectrum, and let's select the drop down. And we don't have Spectrum there yet. So this is going to be for our cable bill, our internet bill. And we're going to select Spectrum to enter the new vendor. And we're going to type that in, and then when we select tab, it's going to say, you don't have this vendor set up, would you like to set it up? And we're going to say yes. Rather than doing the long setup and putting the date and the phone number and whatnot, we're going to do what we need to do just to process the bill. In this case, that is the quick add. We'll set that up. The pay date is February 28th, once again. We're not going to have the reference number. The amount will be $180. We'll leave the bill due date as the default date. And then we need the expense down here. If we look through the expenses, we can see the list of expenses, this being generated primarily from QuickBooks when we created a merchandising company. If we don't see an expense that we want to put this into, such as office expense for basically the internet bill, or telephone expense if it was grouped with the telephone expense, then possibly we want to have another line item, which we might want to call internet expense. That will allow us to track this separately. Now, it's up to the bookkeeper as to how many expense accounts we want to have. If we want to group that into utilities, if we want to put that into the telephone expense, it's all depends on whether it's relevant to our decision-making process. If we would like to look at this expense in a separate line item, then we can have a separate line item. If we have too many separate line items, then when we look at our income statement, it's a little daunting because we have all these line items with dollar amounts that may be insignificant to decision making. However, if we group everything into too large of pools of groups of expenses, then we're not really getting enough information to make the best decisions when looking at our income statement. So it's really up to the person putting the income statement together as to how many line items they want to have. We're going to select tab, and it's going to ask us to set this up. So I'm going to select tab. It's going to say, hey, we haven't set this up. Would you like to set this up? And we're going to say, yeah, set this up. And there it is. It's going to default to the expense. That's what we want. So we will continue with that and continue. And so once again, the expense, same screen, same information. We're not going to put any added description. We're not going to put the tax line in this case. We're not tracking the tax line here. And we're going to say save and close. And what will this do then? It's going to increase the amount that we owe in terms of the accounts payable account for Spectrum in specific, and increase the internet expense account, decreasing net income. Let's say save and close. Here is that process. Then we're going to go to our balance sheet. And if we take a look at the accounts payable, double clicking on that, scrolling down, we see the last check that we have, or not the check, the bill that we have put for Spectrum. Double clicking, there's the bill. Closing this back out, closing this back out. Going to the vendor balance detail, we now see Spectrum here. Double clicking on that, there's our bill. Closing this, closing this. Going to the profit and loss in the open windows. Double checking to see that we have the internet expense. Our new line item has appeared with the 180 in it. Zooming in on that by the double click, we see our 180. Double clicking that, we see once again our bill here. So that's going to be the effect on the financials. Let's do this one more time. That with the electric bill from Edison. We're going to go back to the Home tab. We're going to go to Enter Bills. And we're going to say Edison. So we already have, once again, Edison there. So if we just start typing in, it should auto-populate. There it is. There's our vendor. We're going to select Tab. The date is correct. We're writing them all as of that date, or putting the bills in as of that date. The amount is going to be, in this case, $648. The bill will be the default, no terms, no memo. Utilities pulled up automatically from the last time we have done that. That's great. That's what we want. That's typically going to be correct as it does do that default. Utilities, another item that no matter what type of business we choose within QuickBooks, and QuickBooks then generates a chart of accounts for us, will typically include some type of utilities expense. So that's not one that we will usually have to add if we select one of QuickBooks pre-prepared chart of accounts. Once we enter this, what's going to happen? Accounts payable is going to go up from the bill. Specifically, the vendor of Edison will go up. We will owe money to Edison. And the other side of it will be an increase in the utilities expense for Edison, and that will decrease net income. Let's check that out. We're going to say save and close. We'll go back to the balance sheet, and we're looking at the accounts payable once again, double clicking on accounts payable, scrolling down, last item, Edison, double clicking on utilities. There's the bill. Closing this back out. We can then go to the vendor balance detail, which apparently I closed, and will now reopen by going to reports, going to vendor and payable and vendor balance detail. We then see the Edison here. There's the bill, $365, double clicking on that. We see the item of $365 in the bill one more time. And we will do this again one more time in the profit and loss, the income statement type account from QuickBooks. We then go down to the utilities. That's where we put the utilities bill for Edison. Double clicking on that line item, we see the $648. Double clicking on that, once again, our bill. What we're going to do now is we're going to pay all these. I'm closing this out, going back to the home tab, just to show the payment process all at one time. So I'm going to select the pay bills, and we're going to pay all those at this point in time. Now, depending on the terms, we might just want to pay some of them at some points and not all of them. If we were to pay all of them, we could just have written the check, but this bill icon runs it through accounts payable. It gives us another kind of line item, another audit check within there, and it also allows us to pay all the checks at one time. So we're going to go to the pay bills here, and we're going to select those that need to be paid. So I'm going to just select the ones that we have just created. Now note the options here that we have. We have due before a certain time period. That could limit the amount of options we have, and that could be useful if we are managing a lot of payables. And if we're working in the AP department, we very likely might have a lot of payables we're trying to manage and trying to decide how best to manage our cash flow, and this due date period could help with that. We could also have different filtering options that could help us as well. Sort by, so rather than sorting by date, we might want to sort by amount and try to see and look through this report in terms of the amount due or any other type of issue or any type of column or line item that we would want to sort from. And so this field may not be blank. I'm going to say all. All right. So, and if we see that drop down, that's going to be the drop down, of course, of these that we could then sort by these header amounts here. So then we're going to, once again, I've unselected those in some way, so I'm going to reselect those. And then down here, we're going to keep all this constant. We're going to say the date is going to be of the check as of 2/28. That's when we write the check. It's going to be coming out of the checking account. And we're not going to print the checks, but if we were to print the checks, we would have to have pre-printed checks that we would then put into the printer in accordance with the proper format in terms of which way they go in the printer. Make sure you have that straight. And then you can print the checks, and once we do this, it'll print the checks for us. What we're going to do is assign the check number here, just entering the data, tracking the data within QuickBooks so that it will then populate the information into our financial statements. So I'm going to say pay selected bills, and it says I'm going to go ahead and click let QuickBooks assign the check numbers, and it should then assign the check numbers in the next sequence that are due within the check numbers. And so it'll assign those out for the 3 checks. And we're going to say, oh, and of course that should match our physical checks that we write. So if we're writing the checks in an outside checkbook, we would want to then match up these checks to the actual checks that are being put into the checkbook to here, and say OK. That then populates. I'm going to close this. What should that have done when we pay the bills? Then of course cash is going down by those checks that we have written, and the accounts payable is going down, representing the fact that we do not owe those particular vendors anymore, and the vendor detail will go down for the particular vendors, being in this case Edison, Spectrum, and Verizon. Let's see if that is the case. Going to the balance sheet first. Taking a look first of all at the checking account, the one that's most obvious because we wrote checks. If we double click on that item, scroll down to the bottom, we see the 3 checks we have written: Edison, Spectrum, Verizon. The check numbers being assigned 1020, 1021, 1022 does look like it is in sequence with prior checks we have been writing. If we double click on any of them, we see the check being created. This screen we haven't seen before when we generated the checks because we used the pay bill icon. But when the thing we actually made, of course, was the check when we paid the bills. This is the driving form. We would have the same for Spectrum and Verizon here. We also may want to look at that in the checking account register, which we have open over here as well, because we might be used to the register. I know I am. So here's our register. And instead of just having the plain check here, we have the pay bill item, even though it is a check. If we double click on it, we see that check and close that out. That little item will just tell us that it did go through accounts payable. It did go through the pay bill item. Then we're going to go back to the balance sheet. Going to scroll down to the liability of accounts payable. This then should be the other side of this transaction. Double clicking, zooming in on that item. We see Edison, Spectrum, Verizon, other side, checking account, checks being created. Let's then look this time at Spectrum. Double clicking on Spectrum, we see the bill for, or the check for Spectrum here, reducing the accounts payable. Closing this, closing that. We should also see this in the vendor balance detail. Clicking the vendor balance detail, if we see Edison, here's the check that was paid for Edison, bringing the balance down to 0. If we scroll down to Spectrum, here's the check paid, bringing us down to 0. Verizon, check paid, bringing us down to 0 there as well. Note that there's no effect on the profit and loss at the point in time that the check is paid because we recorded the expense prior when entering the bill.